More than 160 business leaders gathered at the event centre at the Ellerslie racetrack in Auckland this week to hear where the government plans on taking the economy.
In particular, we need a more competitive economy that sells more to the rest of the world. That is the key to more jobs and higher incomes. Compared to a lot of other countries, we're in pretty good shape. The New Zealand economy will continue to expand in 2012. It's now grown for 9 of the last 10 quarters.
Mr English said that New Zealand's trade-export diversification away from struggling European and American economies over the last decade towards Asia is protecting us now. And he also defended the government's controversial plans to sell off the country's silverware and cut spending on public services. But curiously, not once in his speech on the government's economic program did he mention agriculture. Surprising considering many economists say it's the industry which pays the country's bills. However, Mr English assured us that the government sees the primary industries as playing an integral part in its goal of getting New Zealand back in the black by 2014.
Of course it is, and it'll be the principal beneficiary of our focus on competitiveness. So we've got a pretty resilient agricultural sector. It's had reasonable prices, high exchange rate, historically very high, and they need a government very focused on keeping their cost structures and the decision-making processes in New Zealand supporting their competitiveness.
We asked Mr English whether the government was losing any sleep over agriculture's $47 billion in debt.
Well, look, it would put some agricultural businesses at risk. There are high levels of debt, and the ratio of debt to output has grown a lot. They're more dependent on debt than they have been in the past. And that's why you're seeing so many of them taking the advantage of the high prices to get their debt down. That's a good thing. It does mean that our retail isn't growing as fast because they're not spending, but in the long run, they're best to get the debt down. And I just hope that if the prices stay reasonable, that doesn't feed through into another debt-driven land price boom.
And the Finance Minister says farmers will just have to get used to the dollar being above 80 cents.
Well, look, I think they've done a remarkable job of handling the exchange rate over the last few years. I mean, we've had, I think, the highest 5-year average since the Second World War. So their productivity's just got better and better. I think, though, we've probably stopped waiting for the exchange rate to drop back to easier levels, because when you look at what's happening in the US, in Europe, the UK, China to some extent, they're flat out printing money that's reducing the value of their currencies and increasing the value of ours. And while we've tried to influence them when we do meet them, they don't take much notice of us.
Benedict Country 99 TV News.